All right. If you've been paying even a little bit of attention to the markets lately, you've felt it. That buzz, right? The feeling that something big is happening again in crypto. Prices are going nuts. The headlines are everywhere, and it just feels like we're on the edge of, well, something huge. Today, we're going to break down exactly what's fueling this perfect storm.
And that really gets us to the big question. We've seen these crazy cycles before, these crypto manias. But is this one just another round of hype? Or are there, deeper, more fundamental things going on that make this time actually different? Let's peel back the layers and really see what's happening under the hood.
Now, you've probably heard all the usual reasons. The Bitcoin ETFs finally got approved, opening the floodgates for big institutional money. We had the Bitcoin halving, which squeezes the supply. Big companies are jumping in. Retail investors have FOMO again. And yeah, all of that is true. They're all pieces of the puzzle, for sure. But they're not the whole story. Not even close.
To really get the sheer force behind this rally, we have to look at the biggest player in the entire financial world, the one that literally controls the money printer, the U.S. Federal Reserve. There is a massive policy shift happening right now that's basically acting like rocket fuel for this whole market. And look, this isn't some conspiracy theory from the depths of the internet. We're talking about Wall Street giants like JP Morgan, Bank of America, Deutsche Bank. They're all saying the same thing. A major pivot from the Fed isn't just coming, it's right around the corner. So what exactly is this pivot everyone's talking about?
Well, for the last couple of years, the Fed's been doing something called quantitative tightening, or QT. It's pretty much what it sounds like. They've been tightening the screws on the financial system, essentially sucking money out of the economy to fight off inflation. It's a move that makes cash harder to come by and usually puts a big damper on riskier assets like crypto. But that is all about to go into reverse. The consensus is that the Fed's about to pull a three-step move. First, they'll stop pulling money out by ending QT. Then, they're expected to start putting money back in through quantitative easing, or QE. And finally, the big one, they'll start cutting interest rates. Long story short, the Fed is about to turn the money spigot back on and turn it on full blast.
And this isn't just a guess. The market is screaming that this is going to happen. According to the CME Group, traders have priced in a 98.3% chance of a rate cut at the very next meeting. I mean, that's about as close to a sure thing as you can possibly get in the world of finance. So here's the bottom line. When the Fed flips that switch, it unleashes this massive wave of liquidity. All that new, cheaper money has to find a home. And in a world that's starving for growth, it naturally starts flowing towards higher risk, higher reward assets. And guess what's at the top of that list? Crypto. This is the macro tailwind that changes everything. Okay, so we've got a tidal wave of cash getting ready to flood the market. But why is so much of the excitement centered not just on Bitcoin, but specifically on Ethereum? Well, the answer is all about what Ethereum actually is. It's not just a digital currency, it's more like a global decentralized computer. A world computer.
And this world computer has really been through the ringer. It was born from a surprisingly relatable frustration. A 19-year-old kid named Vitalik Buterin got super angry because the developers of World of Warcraft changed his favorite character. Seriously. He realized how powerless users are when a central authority can just change the rules. From there, Ethereum survived a massive, soul-crushing hack. It fueled the wild ICO boom of 2017. And then, in 2022, it pulled off one of the craziest technical upgrades ever with the merge. This thing is battle-tested.
Probably the best way to wrap your head around the difference between Bitcoin and Ethereum is this analogy. Bitcoin is like an old Nokia phone. It's incredibly secure, it's tough as nails, and it does one thing perfectly: store and send value. Ethereum, on the other hand, is like a smartphone. Yeah, it can also store and send value, but its real power is that it's a programmable operating system where developers can build millions of different apps.
The magic ingredient that makes all this possible is the smart contract. Just think of it like a really smart vending machine. You put something in, data, money, whatever, and it automatically spits out what you're owed based on rules that are coded right into it. There's no cashier, no middleman, no bank. It just works. These are the basic building blocks for this whole new world of decentralized finance.
And this programmability, this ability to build things, is exactly why Wall Street is paying so much attention. They're not just seeing a new asset to trade, they're seeing an entirely new set of financial rails. They see a chance to rebuild the whole system to be faster, cheaper, and more transparent. And hey, don't take my word for it. This is Larry Fink. He's the CEO of BlackRock. the largest asset manager on the planet. He's been saying it loud and clear. He believes the future of all financial assets, we're talking stocks, bonds, real estate, you name it, is tokenization. That just means turning the rights to an asset into a digital token that lives on a blockchain. And the scale of what they're talking about here is just mind-bending. The global stock market alone is worth over $126 trillion. Now add in bonds, real estate, private equity, you're talking hundreds of trillions of dollars. If even a tiny fraction of that moves onto a blockchain like Ethereum, the value that network would capture is just astronomical. This brings us back to another really important analogy. If Bitcoin is digital gold, a safe place to park your wealth, then Ethereum is digital oil, is the fuel you need to actually run this new tokenized economy. Every single transaction, every app, every smart contract, it all requires a tiny bit of ETH paid as a gas fee to make it go. It's the essential utility commodity.
And we can already see this happening in real time. Just look at stablecoins, the digital dollars that are basically the lifeblood of the crypto economy. Right now, more than half of all of them are on Ethereum. By a huge margin, it's already the dominant place where value is settled on-chain. And you can bet Wall Street sees that. They're not betting on some far-off future, they're skating to where the puck already is.
So you put it all together, a macro environment that's about to open the floodgates, a foundational technology that's been tested and is ready to go, and a vision from Wall Street that's worth hundreds of trillions of dollars. It sounds pretty unstoppable, right? But it's absolutely crucial to look at this with clear eyes and understand the risks. The bull case is frankly incredibly strong. You have this perfect cocktail of central bank liquidity, a mature and programmable technology, a crystal clear use case from the biggest players in finance, and existing market dominance. It's a combination that has a lot of very smart people thinking we're on the cusp of something truly game-changing. But the risks are just as real. This much hype can easily inflate a massive financial bubble. Governments still have no idea how to regulate this stuff, and one new law could change everything overnight. The volatility is and always has been absolutely brutal. 50% drops are not uncommon. And while Ethereum is the king right now, there are plenty of Ethereum killers, newer, faster blockchains nipping at its heels. And that leaves us with the ultimate question. Do we have all the ingredients for a true financial revolution that could reshape how the world works? Yes. But do we also have all the classic warning signs of a massive speculative mania? Also yes. The crazy thing is, it might actually be both at the same time. And the real question is, which one of those forces is going to win out in the end? That's what makes this moment so unbelievably interesting.